Ladies and gentlemen, welcome back to the channel. Thank you so much for being here. As always, today we've got another fantastic show with Brian, the head of marketing from Santiment. We're going to be talking about sort of data-driven analysis of what the market's looking like right now. We've had a lot of volatility. We've had some, price moves back up and then back down. It's been kind of crazy. So I want to make sense of it and maybe make some data-driven predictions about where it's going. So Brian, thanks for being here.
Thanks so much for having me. Yeah, it's good to be back for, I believe this is our second call, and
Yeah.
it's always an honor to talk with you and your community.
Awesome. Yeah, really appreciate it. And I think one of the obvious places to start is love you to share your screen and we can start out with some interesting views on sentiment.
Yeah, let's jump right in here. All right, can you see this okay?
Yeah, yeah, looks clear.
Okay, perfecto. So I'm starting off with a tweet that we just put out about an hour ago. And this is an update on what whales are doing right now. One of our favorite metrics to really update on is how those key stakeholders are doing at any given time and what they're doing as far as accumulation versus dumping. And right here, we put out a chart that highlights the fact that whales dumped about 70,000 Bitcoin between December 18th and January 8th here, highlighted in red. And then beginning right here, when the price was really starting to bottom out, got around 41K or slightly below it, that's when we started to see this big accumulation pattern of Bitcoin being put right back in their wallets. In fact, as of today, they're right back to where they started with 70K accumulated since that January 8th day, especially in the last 48 hours here, just from the 17th to today, the 19th, we've had an additional 40K tracked that have gone into these Bitcoin whale wallets. And we define these whales in particular as those holding 1,000 to 10,000 Bitcoin. So a pretty significant amount held and accumulated by a group of Bitcoin holders that have a lot of say and pull on where the prices go next.
So the question that I would have then is, how, and I think people struggle with this a lot. How do you differentiate between what might be exchange wallets and true whales, like investors who are holding, individually?
Yeah, in short, not easily. We
Hmm.
definitely can. We have things like top transaction tables. Exchange supply is something we look at, and we can actually look at that here and find out exactly how the supply on exchanges is looking with this uptick. And right now, if I full screen this, we can clearly see that since this is about 6 months ago, so since July, when the supply on exchanges was about 13.6%, it's dropped down to about 11.5. So give or take about 2.14% of the overall supply of Bitcoin is now off exchanges, which is generally regarded to be a good thing because it means that there is less implied sell-off risk that can occur because
Hmm.
those coins are no longer sitting on a means of exchange for them to be dumped. So obviously it's an imperfect measure, but overall we consider the supply going down combined with whales accumulating to be a very good combination.
Very interesting. And I mean, looking at that too, you see, I mean, since the middle of this chart, I guess that would be about November where the turning point is that I can see the peak. You see that supply on exchanges has been dropping steadily, as has price. So you almost have an incongruency in
Mm-hmm.
that trend.
Yeah, it's very interesting. It's not exactly going to be one of those correlative metrics where you see one big day of a drop and all of a sudden the price is going to go up the next day. But on a macro scale, if you're looking at kind of a 6 month, 1 year type of zoom out chart like this, you can grab some pretty good insight as to whether the sell off can continue or whether it'll come to a halt at some point. And right now, with every percentage or even 0.1% that's going down, that is a better sign that things are going to turn positive eventually.
Now, I quickly wanted to thank the sponsor of today's video, which is iTrust Capital. And iTrust Capital basically allows US crypto investors to open an individual retirement account for pre-tax or after-tax money to trade crypto in a tax-advantaged manner. So during market volatility, like we've been talking about in this video so far, you might want to trade more aggressively or rebalance your portfolio more often and not have to worry about the tax implications of that particular trading activity. iTrust Capital gives you the ability to do just that in an IRA context. And they just raised a pretty huge $125 million round, so that experience is just going to get better. If you want to open an account, I've left a link in the description below, and you can get a Bitcoin reward bonus for signing up. And thank you very much to iTrust Capital, and thank you to you. Yeah, I mean, I think a lot hinges on macroeconomic conditions. I mean, right now people are seeing that despite the narrative, crypto is still very much correlated to the traditional markets, particularly in equities, and that's something that people need to consider.
Absolutely. Yeah, we can actually compare. So I can take this off, put on SPX here. Just type in right there, SPX, add that to the price. And now we can actually see directly how Bitcoin is going compared to SPX. These are, of course, on different axes. If I did shared axis, of course, Bitcoin would dwarf it. But without it, you can see how the highs and lows kind of fluctuate. And there is quite a bit of correlation, especially beginning in October. And kind of, you got a little bit of separation in early December. But like you said, you know, they've kind of dumped in parallel as of recent weeks. And today is kind of the first day that we've seen a little bit of separation. S&P 500 is, of course, going up today as well, but not quite at the rate Bitcoin is.
Yeah, it's very interesting to look at stuff like this and to really see tangibly what's going on. Of course, these are not always predictive metrics 100% of the time. I mean, nothing is absolute, but what they do give you is an idea of the trend in the current moment and making decisions in that shorter time scale.
And we've actually done some studies on the correlation between the traditional markets and crypto to see when the best times are that bull runs typically begin. And actually, it may surprise many that when you see opposing correlations, that tends to be a good signal that a bull run could begin. So like, for example, this is, of course, just a mini scale, and we wouldn't just call 1 or 2 months a bull run by any means, but late September, when we saw this big dump by the S&P, look at how Bitcoin proceeded to go on a big tear. And if I hold down shift, we can actually see the percentage gain going up to that all-time high. So it went on roughly a 66% surge between that month and a half or so, right after the S&P had that initial dump. So it can be kind of a leading indicator that, you know, when the S&P is starting to go down, people who have a lot of money in those traditional markets are looking for alternatives, and crypto can often be one of the more enticing things out there.
It's very interesting. I mean, looking at also something like Ether, for example, that has done really well for a pretty long period of time, you know, starting to see signs maybe of slowing down. But what kind of metrics can you find on the Ether side?
Yeah, great question. We love looking at Ethereum based assets. In fact, Santiment has the most data on ERC20s. So we've got pretty much anything under the sun you can think of that is considered a legitimately well documented metric for finding alpha for where prices are going. And for Ethereum, we're seeing kind of the same thing. It is not looking the most amazing right now in comparison to some of the other assets out there. For example, Bitcoin is looking a little bit better right now compared to Ethereum. Part of the reason why is Ethereum's circulation here. If you look at this 7-day line, I'll just full screen it. This 7-day line here is the smooth moving average. We're actually below where we were 6 months ago in terms of circulation, despite, you know, 6 months ago the price being below 1,800 and now being around 31, being in the 31 to 3,200 range the last couple of days. That's not what you want to see, right? This is kind of a bearish divergence because circulation is below where it was when the price was almost half of where it is today.
Right. And how does that affect the other assets on the Ethereum blockchain that are very much dependent on this? Because I've kind of noticed that it's not a guarantee or a rule, but a
Right.
lot of times if Ether moves, a lot of ERC20s do as well.
Yeah, there's definitely correlation. It's undeniable. The big outliers like Matic, for example, Decentraland last month,
Hmm.
Shiba over the summer and fall. These are ERC20s that were able to kind of decouple and do their own thing. But even still, when you see like a big Ethereum uh, pump, like we've seen over the last 6 or so hours before the time of this recording,
Hmm.
or alternatively a dump, you'll see those assets sort of get right back in line and follow it either way up or way down. So ERC20s tend to stick together, and the larger the market cap grows, like Matic, for example, has had a great past year
Hmm.
because its market cap has grown so much. It's gradually getting less and less correlation and being able to rely on its own trading volume without being so dictated by Ethereum.
Makes sense. Looking at it, it's almost like what Ethereum is to ERC20s. A lot of like most of crypto is to, or Bitcoin is to most of crypto. Where
Exactly.
Bitcoin goes, a lot of the other cryptocurrencies, with exceptions like Luna, for example, has been moving irrespective of the market. It's very interesting to look at Bitcoin as that sort of barometer for where the markets are going.
Agreed. Yeah, a lot of people think that over time there's going to be less and less correlation to Bitcoin as far as what all the other projects are doing.
Hmm.
2021 was probably the least correlation we saw in terms of altcoins versus Bitcoin. That being said, that's not saying much, right? Because there's
Yeah.
still a very heavy correlation due to the fact that trading pairs on most large exchanges are still going to be circulated around Bitcoin. And until that changes, and there's like a massive top 10 exchange out there that's suddenly trading with like only Ethereum pairs or like only Matic pairs or Dogecoin pairs, what have you. It's always going to kind of be dictated by Bitcoin because whenever there's a trade on one side, it's always happening in tandem with a Bitcoin trade.
Hmm. Yeah, and people, maybe like the average retail person or someone who's in crypto and is often trading on dexes, like decentralized exchanges, they might not realize that because a lot of the pairs are in the native, the native coin or an ERC20 stable
Right.
coin or whatever.
Yeah, absolutely true. Absolutely. Um,
So,
yeah, go
Brian, I have
ahead.
a question for you. If you had to give a guess as to, maybe the next, obviously time scales are tough, but maybe let's say the next month, barring some crazy macroeconomic shift, maybe the Federal Reserve announces tangibly rate hikes and asset sell off, those things we can't control. All things
Sure.
being equal, what are you seeing in terms of a prediction about where the markets move?
Yeah. So of course, you know, a big statement I always want to make
Yeah.
as a representative of sentiment is we don't do direct price predictions. That being said, what we can do is point to historical metric performance when they are in the state that they're currently in right now,
Hmm.
and say that based on probability, we have a better or worse chance of going up, right? Um, so based on getting that clarification and qualifier out of the way, um, I can say that out of just the last 48 hours, especially in terms of what's going on with that whale metric, this
Hmm.
is probably the best it's looked in over a month, maybe
Hmm.
even since the all time high back on November 10th, I believe it was. Uh, Only because we're seeing key stakeholders all over the place right now starting to show some serious signs of accumulation, even beyond just Bitcoin. A few assets that are in particular showing some accumulation would be Matic, um, We see 0x for people who've been around for a while and haven't heard
Hmm.
of that coin in a while. That's getting a lot of accumulation right now. Um, Another one would be Maker. If you guys
Hmm.
are fans of Maker DAO, that's another one I've seen. So that's just a few three freebies that, at least on the whale side, are showing some bullish signs. But of course, whales are only one metric, and you guys can probably tell by all these metrics I'm breezing through here that we can gradually go through on future calls. There's a lot that you can look through, both on the on-chain side and then, of course, socially. Socially, by the way, it's looking very good. And we typically look for massive degrees of FUD going on as a sign that
Hmm.
capitulation is occurring, and therefore it's a good time to buy, because those small traders are bowing out, saying, crypto is never going to go up, it's dead. And when that notion starts to become like the uniform mindset, that's
Hmm.
when the prices really start to bounce and make those panic sellers kick themselves.
Yeah, it's a tough time, I think, for people in this space, because I don't know if you agree with this, Brian, but this is one of the most risky times to be making moves on a short time scale, at least, where you need
Right.
to move maybe back out of the market quickly, because there's so many unpredictable elements around traditional markets, around macroeconomic conditions, around even just in crypto, how investors are behaving, even big entities. Things can
Right.
change quickly.
100%. Yeah. I don't remember the last time we saw this level of inflation
Hmm.
in tandem with crypto existing. So
Yeah.
that's something where it's kind of new territory, where we're kind of discovering together what kind of impact this has. And of course, we're 2 years into a pandemic as well, which we of course never had up until March 2020, and we saw what happened on that Black Thursday, where prices uniformly dropped 50% or more. So the pandemic is of course still picking up. Volatility is still uh, a thing, even though Bitcoin is in a range right now. It's looking like it's starting to pick up some volatility steam, which
Hmm.
can mean that for the gamblers out there, if you like to swing trade, you could have a lot of fun right now. But for those who are kind of hodling and um, looking at crypto as more of a long-term investment, it can be pretty dicey, just like you said.
Yeah, without a doubt. So I think moral of the story is right now is the time to be as careful as you can be and be very well hedged and have a plan for risk management. Right. That's
Well
probably
said.
the biggest takeaway that I can give in this
Yeah,
regard.
I see a lot of traders kind of have a plan to be a long-term trader, and then as soon as Bitcoin goes up 5% or down 5% in like a short period of time, they just abandon that strategy altogether, and suddenly they decide they're going to just swing trade any crazy 2 hour spike or drop, and suddenly they're in a spot where they've gone away from what their plan was, and they can drive themselves crazy. And I've seen you talk about this in your videos before as well. Like, it's really important to stay disciplined, trust the fundamentals, right?
Hmm.
For sports fans out there, trust the fundamentals is a common saying. And in crypto, it's the same thing. You just want to make sure you are sticking to your plan and don't completely diverge just because of one crazy volatile day, which is designed to make you either FOMO in or FUD out. So keep that in mind.
Yeah, really important for people to keep in mind, without a doubt. And the last thing I wanted to ask you, Brian, before we close out, is in regard to how people can use sentiment as a tool to draw some of these same conclusions. Where can people maybe go to learn about some of those things, or even just see insights from your team themselves on what you're seeing on the data?
Yeah, we have an actual insights page right here. So if you go to sentiment.net, or actually more specifically go to app.sentiment.net, I'll give Hashoshi all of the links after this call, so we have them in the
Mm-hmm.
video. Just go to this insights page right here, and you'll see all sorts of insights that we've made, mostly on a daily basis. We'll update something going on with the markets. The latest thing we've talked about is, of course, the buy the dip behavior going on. So this
Mm-hmm.
is the actual raw amount of people that are mentioning that it's time to buy the dip. And you can see quite clearly, usually when people uniformly think it's time to buy the dip, that means it's not time to buy the dip until you see social volume go really low. And then you get these kind of mild spikes. And look, just recently, we were kind of declining with those mentions. And finally, as the mentions were really starting to dwindle, that's when we spike. So long story short, it's one of the many kind of insights that we provide here. And if there's one singular place to just keep tabs on what's going on in the markets, I'd say insights.santiment.net is a pretty great start.
Excellent. So, folks, I will leave a link in the description below, or multiple links for these sorts of things where you can start to extract some of the data points and the insights that we've talked about today. But most of all, Brian, I want to thank you for joining me and talking about this stuff.
Yeah, it's been a real pleasure. This is always a good time, and we definitely appreciate what you guys do. We know there's a ton of overlap with you being such a steady presence who really objectively looks at the markets on a weekly basis, giving your input on what's going on the fundamental side. So always a pleasure, and hope we can do more of these in the near future.
Definitely can. Always good to get sort of that alternative technical analysis slash quantitative analysis look at it as well. So folks, if you're watching, thank you so much for watching till the end of this video. Really appreciate it. And I want to wish you and your family a wonderful week ahead. Until next time, cheers.
Stay safe, guys. Thank you.